You are looking at a chart of gold on a on a daily time frame, and I want you to ask yourself, where is this market going? Okay, on a daily chart, what is the higher time frame order flow? Are we bullish? Are we bearish? What is it on this chart? What do we see? Think about it. Where have we come from? Right, we've come from the lows. Okay, there's been no. We've taken this liquidity. Okay. So we've taken liquidity. Where are we going? We have taken this liquidity. Okay. So what do we see in the charts? Are the down candles supporting price going higher? Or are the up candles holding price? What do we see here? What's this? Could that be a daily order block, these two down candles? Have we taken liquidity? Yes, we have. Therefore, that is a potential daily order block. When is the daily order block validated? When we close above with displacement. Okay? And so looking at this chart, on the daily chart, higher time frame, where is the draw on liquidity? What do you think? Are these quite relative equal highs? Do you think there will reside up there buy stops? Is it possible? Right? Is it possible? Think about this question. Think about the answer. Is it possible that institutions have bought the market under these lows? Is that possible? So anyone that may have longed right here, where would their stops be? They'd be under here. Okay? What sort of stops would they be? They would be sell stops, meaning anyone that's long here, retail traders, would be willing to sell, right, at market if price went back below here. And who would be buying those orders as the market went down to that level? Who would be buying those orders? Institutions. Okay? Let's think about this move. This move down was doing what? There were people who were long the market from here, having stops under that low. This move down was grabbing those stops, okay? And rebalancing that inefficiency, right? Where we had a reaction from. Where would the market go next? Up to this inefficiency. Notice how that inefficiency is left open, okay? Market comes down to do what? Stop out anyone long from that level, okay? And to take long positions from retail traders willing to sell at a low price at market, okay? So if institutions have bought down here, where are they going to offset their long positions? They need to offset their long positions where they are willing buyers. Where are their willing buyers? Well, anyone that's short from these highs have buy stops up here, right? And so when the market goes up there, from down here, is that a level institutions can offset their long positions, right? What are retail traders doing here? They are willing to do what? They are willing to buy gold at market price at this high. Why are retail traders willing to buy gold at market price at the highest it's ever been? Because they are short the market and they need to have stops above this level to mitigate losses on their shorts if the market continues to go higher. Institutional traders, market makers know that. So they will accumulate positions at these lows, offset those long positions at these highs. And who are they buying and selling to? Retail traders and or large institutional traders, right? So I'm not going to answer the question. I want you to think about where this market is headed based on what you see here. Okay? Let's now drop down to a 4-hourly chart. Let's actually look at a weekly chart. What's the weeklies indicating? The weekly chart hasn't closed. Let's take off these lines. But let's have a look at where has this weekly come from. What's this? This is last week's candle. We've had a move down. Where to? Where? Why did we have this move down? We had up, 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 up. We had down. Why? Because this down candle, see this up move, is from this down candle, this order block. As soon as we trade above there and close above, that validates this order block, this weekly chart. And it continues to go up, comes down, taps into the order block, goes up, up, down, taps into the order block again. Right, this down move. Now this weekly candle is trading above this bullish order block. Hasn't closed above because we still are within the week. Okay, but so far, this is bullish order flow on a weekly chart. where on a weekly chart would there reside liquidity? Buy stops. So if institutional traders or market makers have bought gold on this move down into this bullish order block, okay, where would they be offsetting their long positions? Where would they find people willing to, where would they find people to sell their long positions to at a price higher than where they've bought? Where would they find that? They would find that at these highs, because that's where everybody's stops reside from anyone that's short in that week, right? Could that be, I'm not going to answer the question, I want you to think about this, could that be the draw on liquidity? Okay? I will give you a hint. I did put a forecast out that I'm looking for 2,500. Okay? I don't know where that is. I'll have to look at whether it's on Twitter or on a video. Okay? That was my forecast. Okay? So I want you to think about that, because you need to be able to identify and assess the market. But from these two charts, what can we assess? This is the daily chart. Okay? What can we assess from the daily chart that we've looked at? Okay? And the weekly chart that we've looked at in terms of order flow. Well, to me, the daily showing bullish order flow. We've got bullish order blocks that we have closed above, and we have taken liquidity down below. Okay? We've got relative equal highs above. We're kind of trading back down into this daily order block now. Okay? And on the weekly chart, seems to be bullish as well. Liquidity residing above. We've already come down into weekly bullish order block. Okay, let's look at a 4 hour. What's the 4 hour telling us? And it's time to wrap up. Now, we've gone down and up and come back down to mitigate this, right? Because we've already traded into this, right? From this down move. Okay, that's a low. That's a high. Okay, let's actually label this. We're going to label this. That's a low. This is 4 hourly chart, so it's a high time frame. Okay. This here is a high. Okay. This is a high. Then we have a lower low. This is very important. Very important lesson here, because this helps you identify order flow and structure. What do we have here? Higher high. Okay. Higher high. We've closed above this high, so this is a higher high. Okay. High high. Have we had displacement going through that high? Yes, we have. We've got these gaps. Low, high, lower low, and high high makes this up candle. Okay, this last up candle in this swing high. I'm going to get rid of this now. What do you think that is? The last up candle in this swing high becomes what when we go above there after low, high, lower, low, high, high. That is now the bullish breaker. That level should offer support. Okay? Haven't come into that yet, right, on this time frame. And maybe New York will do that, possibly. Okay? We can get rid of this line too now. Don't need that. This is 4 hourly chart. So what's 4 hourly chart telling us? What's the order flow here? Down candles are supporting price, or are we saying up candles holding price and we're going down? What are we saying here? Order flow is bullish. Okay? Order flow is bullish. This is a bullish breaker now. Now, sure, we can come back down. That could be possible, and then start to move down. That's a possibility. But right now, order flow is bullish from what I see. Okay? On an hourly chart, what do we see? We do have a breaking structure on an hourly chart. Okay? Because we've closed below this swing low. Okay? So that could be the start of a shift. But high time frame, 4 hourly, bullish. Where's liquidity? Equal highs. 2480. Okay? Daily chart, high time frame, bullish. Bullish order blocks, validated with the close with displacement, and we expect a pullback into that. Okay? I personally don't really like to take entries from the highs when we're referring to bullish order blocks. I like it to come down to the open of the candle. That may mean I miss on the trade. But in this case, I'm not expecting us to come down to the open, because even on the daily chart, what have I just taught you? Low, high, lower low, higher high. This up candle in this swing is the bullish order block. Okay? Now, the 4 hourly may be the one that holds. Okay? Which is what we have highlighted here. Okay? We may not get down to this. This one down here. Okay? So you've got to kind of manage your trade accordingly. Okay? But this lesson, this discussion is all about where do we feel the market's going. So daily chart indicates bullish order flow. Weekly chart indicates bullish order flow. The down candles are supporting price. 4-hourly chart indicates bullish order flow, right? It's only the hourly chart that is suggesting a change in direction, okay? But it's the higher time frame that we need to use to assess order flow, and the lowest we can go down to, from my opinion, is the 4-hourly, okay? I don't believe, well, my trading plan doesn't allow me to use anything lower than a 4-hourly chart to determine order flow, okay? So you need to decide for yourself, based on what I've given you here as guidance, on where you think we are headed, because they are the decisions that you will need to make, okay? So I've given you some guidance, some teachings about how to use high time frame to do that assessment, but you need to make that choice. So study the chart, okay? Make a decision for your learning. I'm not saying go and put on a trade. That's not what this is about. This is about learning price action. Write it down in a notepad. Where do you think this market's going? Maybe do some analysis on your own. Maybe look at a monthly chart. I haven't selected the monthly chart on purpose. I want you to go and look at that, okay? Write it down on a notepad. Watch the market. Let's see what happens over the next couple of days, okay? I hope the video was useful. I will now talk with you in a future video.